Hello everyone and welcome to Day Trader S&P 500. Today is Wednesday, July 27th, 2022. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500 on YouTube. Excuse me there. Want to go through the Qs, US 10 years and cash S&P and ES futures. Market just opened about 15 minutes or so ago. 8:45 a.m. Central here. Let's look at the Qs daily chart. You can see we've got a 1 down in a circle, a 2 up, 3 down in a circle, 4 held, almost exact hit, direct hit on our target. Okay, and we have here, you can see a 1 down, 2 up, 3 down, 4 up, 5 down, and then we have a retracement that has moved from the 618 to the 786. We'll see if that holds. That I think it's a 317 needs to hold. If it does, then we're looking for wave 5 down, and the wave 5 down target is down there at 224. Okay, we'll see how that plays out. Otherwise, I'll do it here for you guys. Otherwise, that's a very short 5 down there. But 5 equals 1 down here at 224. We'll see how that plays out. We have our trigger points and our targets and resistance level up here on the Qs. US 10-year, we like to keep looking at that. We're looking at a daily chart. You can see we have, I'll give you guys the bigger picture here, all the way from the 2020 low, 39-year bear market and interest rates ended, and the bull market and interest rates started. Wouldn't have any reason to think it wouldn't last 39 years like the bear market did. Anyway, you can see there we've got a completed 5-wave pattern to the upside. This is a daily chart. I want to focus on that last wave up here from 4. We have a 1, 2, 3, 4, 5 in red. We have some higher targets up here. Those are still in play. We need to see this wave 4 low hold for that 5 to extend higher, if you will. Otherwise, we're looking for a move down, and our first Fibonacci target is 1.425%. Again, the traders in the pits in Chicago or electronically these days, they are the ones who set the interest rates, and the Fed merely follows, as they always have and always will. The tail never wags the dog. The dog is the traders, or the dogs are the traders. Okay, we'll see how that plays out. We're going to leave that open there and see if this holds. If it doesn't, then we're looking for a move down here. Okay, that's it on the US 10-year treasuries, S&P 500 cash market. Excuse me. Let me move this in a little bit here. Here you can see January 4th all-time high. 5 waves down for A, 3 waves up for B, 5 waves down for C in parentheses. That makes the larger wave A. There's a wave B up, and then we're going to repeat that. 5 waves down for A, 3 waves up for B, and then we look for 5 waves down in C for the larger wave C. Okay, this thing here is above the 618. The high so far is 40.12. C equals A at 40.31. So we're allowing for that to go higher to make the wave C high to be equal to wave A, which would complete the larger wave B and lead to a wave C down. We're going to watch this closely. We have parameters. We'll get into that with the ES futures there, okay? And then, again, this is a daily chart. I want to look at things from this wave A low because we got an A down, a B up. Should be followed by a C down, okay? There is that A wave low on an hourly chart. There is a smaller degree wave A up, smaller degree wave B down. There's a C up. Again, it equals A at 40.31. 618 is at 39.71. The high so far is 40.12. And again, C equals A at 40.31. We have another Fibonacci retracement target above at 40.61. We're going to look, again, that C is part of a larger wave B over here, and that should lead to wave C down on a larger scale. Look at the E-minis. Again, same chart, same scheme. The January 4th all-time high, A, B, C for the larger wave A. There's the B up. And again, we got an A down, a B up, which should lead to a C down. Within the larger wave B, we have a small A up, small B down, small c up. In the futures, that C equals wave A at 40.35. Remember, in the cash it was 40.31. And then that should lead to a C wave down. So again, we'll look at things from a closer perspective on the wave A low. Should be on an hourly bar. There we go. There's that A up. There's that B down. C equals A at 40.35. The high so far is 40.16. We put out to our subscribers, we have trigger points here, or make or breaks, if you will. For this to be here, there, we need to see a break of this low, a break of this low, and a final break of this low. First confirmation, second confirmation, final confirmation, okay? We've got it spelled out there. If this high at 40.16 is broken to the upside, then it's moving toward our target at 40.35, which is right there. There are higher targets like we showed you on the cash, but it shouldn't go above this 42.02. That's the make or break. That's where this count is wrong. So this B wave up here is complete or nearly so. It's either complete here at the 722 high of 40.16 or it'll reach that Fibonacci multiple, multiple where C equals A at 40.35, but it should not go above 42.02. What should happen next is this large wave C down, which will be equal to A, but it'll have a different angle. This A is at a 45. This C will be steep. Okay, it should be fast and quick and furious and have gaps and everything else. So we're at a critical point here. This B wave up is complete or nearly so. Should give way to wave C down. Let me show you guys. Oh, I wanted to show you guys too. Give me just a second here. I wanted to show you guys the auto trades. People are asking. I'm not a trading service. I do trade, and we have an auto trade here where Striker Securities, which is a futures broker, does auto trade my trades. They recommend a $25,000 account. You would open an account with them. There's a $150 monthly subscription for that, but they will trade what I trade. Okay, so if you don't want to watch the market all day like I do, hit up Striker Securities, open an account with them, and they will auto trade my signals. I want to show you guys a couple picks here. Let's look at first the hourly bar. This is the futures again. Okay, there's that ABC, if you will. There's our targets. There's our trigger points. And there's our confirmations for the downside move and the confirmation for the upside move. We want to make sure our subscribers are prepared for anything going into Fed Day, because there's usually a lot of volatility and huge moves to the upside and the downside. We don't want to be whipsawed like most people will be. Okay, let's look. We had the hourly there. Let's look at the 10-minute. And here we are here with, I don't know if I showed you guys this on the actual chart, but this is breaking down in perfect Fibonacci extensions and retracements. We have a 1 down and a 2 up, and this third wave subdivided 1, 2, 3, 4, 5. And this can't be 4 because it's above there, so it appears to be a series of 1s and 2s. 1 down, 2 up, 1 down, 2 up. We'll see if it's a 3 of 3 of 3. Again, we got to look at that. 39.88 is the make or break. There it is. For this smaller degree wave count, there's our targets there. And you can see it's set between the 618 and the 786. Let me get over there and see. I think I may have that on the chart there. Let's see if we have the ES. There's the hourly. I probably don't have it ready. That's the 1 minute. Where did I put the 10-minute? Hourly, daily. I don't have the 10-minute ready unless it's over there. Nope, nope, nope. Okay, well, the picture will suffice. My apologies for that. There is the 10-minute. That's the near-term count. That's what we're looking at, more short-term. Okay, that's it for now. We'll see what the Fed does. We know this. Whether the market moves up or down, the media will blame it on the Fed. Either way, either what they said or what they did, it'll be the reason after the market moves that they give for it moving. We've got our targets before the market moves, both to the upside and the downside. So we'll see how it plays out. Let me leave you guys with, let's go with the hourly. Okay, the bigger picture. And until next time, take care, everyone.